Based on the provided price history and forecast for Bitcoin, a bullish strategy appears to be more suitable. The recent price action shows an upward trend, with the price consistently rising over the past few weeks. The forecast also suggests continued growth in the coming weeks. Therefore, I recommend a long-term investment strategy for Bitcoin. We should enter a long position at the current price of $69,300. A stop loss can be set at $67,000 to limit potential downside risk, while a target price of $81,900, the highest predicted price in the forecast, offers a significant profit potential. This strategy capitalizes on the positive price momentum and aims to capture substantial gains as the price continues its upward trajectory. Given the price trends and forecast for Ethereum, an aggressive investment strategy would focus on a long-term approach to capitalize on the potential for sustained upward momentum. The historical prices demonstrate a clear upward trend, with the current price hovering near the support level of $2,746.91. The forecast suggests a continued upward trajectory, with prices potentially reaching $3,150 in the coming weeks. This indicates a bullish outlook in the medium to long term. Therefore, a long position is advisable to capitalize on this potential price increase. An ideal entry price would be around $2,780, slightly above the current price and the support level, allowing for a buffer against potential short-term volatility. The stop loss should be set at $2,680, providing a cushion against significant price drops. The target price should be set at $3,050. Aiming to capture a substantial portion of the projected price increase. This strategy aligns with the long-term bullish outlook for Ethereum and aims to maximize returns while managing risk. Given the price trends and forecast for Ripple, a medium-term investment strategy appears to be the most suitable approach. While the historical prices show a recent upward trend, forecast suggests a continued but gradual increase in price over the coming week. This indicates a bullish outlook in the medium term, making a long position advisable to capitalize on the potential for price appreciation. An ideal entry price for this strategy would be around $0.525, allowing you to buy in at a price close to the current market value while still benefiting from the anticipated price increase. The stop loss should be set at $0.515 to protect against any unexpected price reversals. The target price could be set at $0.560, aligning with the upper end of the forecast range and allowing for a reasonable profit margin. This strategy balances risk and reward, aiming to capture the anticipated upward momentum of Ripple in the medium term. Solana's 2-week price history reveals a fluctuating trend with recent upward momentum. Forecast predicts a continued upward trajectory over the next week, reaching prices potentially higher than the current historical highs. This suggests a bullish outlook for Solana in the short to medium term. Based on this analysis, an investment strategy for Solana should involve a long position. A suitable entry price would be around $185, aligning with the predicted price increase. The stop loss should be set at $175 to minimize potential losses if the price unexpectedly retraces. Target price could be set at $205, aiming to capitalize on the projected upward movement and secure profits before the market potentially cools. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. Given the price trends and forecast for Cardano, an aggressive investment strategy would focus on a long-term approach to capitalize on the potential for sustained growth. The historical prices demonstrate a consistent upward trajectory, with recent price increases suggesting strong buying pressure. Forecast indicates continued upward movement, with prices projected to reach $0.476 in the coming weeks. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level of $0.4465, an entry price of $0.364, aligned with the current price and near the support level of $0.4005 would be ideal. To manage risk, a stop loss at $0.348, slightly below the recent dip, is recommended, a target price of $0.4465. The resistance level allows for significant profit potential while aligning with the forecast. This strategy takes advantage of Cardano's positive momentum and aims for long-term capital appreciation. Based on the provided price history and forecast for SUI coin, a bullish strategy appears promising. The historical data reveals an upward trend, with recent price fluctuations settling around the $2.00 mark. The forecast predicts further growth, with prices potentially reaching $2.50 or higher in the coming weeks. This suggests a favorable environment for a long-term investment. Therefore, I recommend a long position on SUI coin with an entry price around $2.10. This entry point allows you to capitalize on the predicted upward momentum while providing a margin of safety below the current price. Set a stop-loss order at $1.95 to limit potential losses if the market reverses unexpectedly. A target price of $2.50 offers a realistic profit objective, aligning with the forecast and allowing for a healthy return on investment. This strategy balances risk and reward, aiming to capitalize on the bullish outlook for SUI coin over the medium term. Given the price trends and forecast for Filecoin, a bullish investment strategy would focus on a medium-term approach to capitalize on the anticipated upward momentum. The historical prices show a consistent upward trajectory, with the current price close to its forecast and near the support level of $3.73. The resistance is at $4.206, indicating that there is still some room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An aggressive medium-term investment strategy could involve an entry price of $3.75, aligning with the support level and the current price trend. The stop loss should be set at $3.60 to protect against any unexpected price pullback. The target price should be set at $4.00, allowing you to take profits before the price reaches the resistance level. This strategy balances risk and reward, aiming to capture a significant portion of the anticipated upward movement in Filecoin over the medium term. Given the price trends and forecast for Theta network, a moderately aggressive investment strategy would focus on a short-term approach to take advantage of the potential for price increases. The historical prices show a fluctuating trend, with recent prices hovering around the support level of $1.103. Forecast indicates a gradual upward movement towards $1.247, suggesting a bullish outlook in the short term. In this scenario, a long position is advisable to capitalize on the potential for a price increase. For this strategy, an entry price of $1.13 would be ideal, allowing you to buy in near the support level and capitalize on the forecast's upward momentum. The stop loss should be set at $1.10 to protect against any unexpected price drops. The target price should be set at $1.22, slightly below the forecast's peak, allowing you to take profits before the market potentially reaches resistance and experiences a pullback. This approach aims to capture a portion of the anticipated upward movement while managing risk effectively. Based on the provided price information for Dogwifhat, a cautious approach leaning towards a short-term investment strategy appears most suitable. The 2-week price history demonstrates a fluctuating trend with a slight downward bias. The forecast suggests a continued downward trajectory, with prices potentially reaching around $2.31 in the coming week, while the support price sits at $2.284. The current price is hovering close to the forecast low, indicating a limited room for significant upward movement. Considering these factors, an investment strategy would involve entering a short position at the current price of $2.39. The stop loss should be set at $2.409, the resistance level, to minimize potential losses if the price unexpectedly surges. The target price would be $2.31, the forecasted lowest price, allowing for a modest profit while mitigating risk. This short-term strategy aims to capitalize on the anticipated downward price movement in Dogwifhat over the next week. Based on the provided information for Stellar, a short-term investment strategy appears to be most suitable. The historical price data reveals an overall upward trend, but the recent price action has shown some consolidation. Forecast price indicates a continuation of this upward movement, with potential for gains towards the resistance level. However, the short-term nature of this strategy is crucial as it aims to capitalize on the immediate price fluctuations within the next week or so. A long position on Stellar is recommended for this strategy. An entry price around $0.0968, aligning with the recent consolidation area and below the immediate resistance, would be ideal. A stop loss at $0.0942, slightly below the recent lows, would help manage risk. The target price should be set at $0.102, aiming to capture the potential upside towards the resistance level. This strategy focuses on riding the wave of the upward momentum predicted by the forecast while minimizing potential losses through a well-defined stop loss order. Based on the provided price information for Starknet, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a volatile trend with both upward and downward movements, while the forecast price suggests a slight upward trajectory over the next week. The recent price dip towards the support level of $0.3942 indicates potential for a consolidation period before a sustained upward move. Therefore, a long position is recommended with an entry price around $0.3942, aligning with the support level. This provides a buffer against further downward price movements. The stop loss should be set at $0.371, slightly below the recent low point, to minimize potential losses. The target price can be set at $0.4132, the resistance level, aiming to capitalize on the potential upward momentum. This strategy allows for a balance between risk and reward, taking advantage of a potential upward trend while mitigating potential losses. Given the price trends and forecast for PENDLE, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a fluctuating trend with a recent upward movement. The forecast indicates a continued upward trajectory, suggesting potential for growth in the medium term. The support price at $5.146 provides a safety net, while the resistance at $5.472 presents a potential ceiling for short-term gains. Therefore, a long position is recommended for PENDLE. An entry price around $5.25 would allow you to capitalize on the current price level, while leaving room for potential growth. A stop loss at $5.15 would help mitigate risk, protecting your investment if the price drops below the support level. A target price of $5.50 would allow you to secure profits as the price approaches the resistance level. This strategy aims to take advantage of the anticipated upward momentum in PENDLE over the next few weeks while managing risk effectively. Based on the provided price information for Render, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows some volatility, but the overall trend is relatively flat. The forecast suggests a slight upward movement, with prices potentially reaching around $4.9, but the support price is relatively close, indicating potential for consolidation or even minor dips. Given this, a long position could be considered, but with a conservative approach. An entry price around $4.65, slightly below the current price and above the support level, would allow for a margin of safety. The stop loss should be set at $4.55 to limit potential losses in case of a sudden price drop. The target price could be set at $5.05, aiming to capture a portion of the potential upside while staying below the resistance level. This strategy balances risk and reward, allowing for potential gains while mitigating the risk of significant losses in a volatile market. Given the price trends and forecast for VeChain, a short-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a slight downward trend, but the forecast suggests a potential rebound, with prices anticipated to rise slightly over the next week. The current price is close to the support price of $0.0220, indicating a potential buying opportunity. Therefore, an aggressive short-term investment strategy could involve entering a long position at the current price of $0.0218. A stop-loss order should be placed below the recent low of $0.0204 to limit potential losses. The target price could be set at $0.0223, aligning with the resistance level and the upper bound of the forecast. This strategy aims to capitalize on the potential upward momentum in VeChain within the next week. Based on the provided information about Binance Coin, a medium-term investment strategy appears to be the most suitable. The historical price data shows a fluctuating trend with periods of both upward and downward movement, while the forecast suggests a slight upward trend in the coming weeks. Price is currently hovering near the support level of $552.61. This indicates a potential for consolidation or a slight pullback before a sustained upward move. Therefore, a long position is recommended. A suitable entry price would be around $565, slightly above the current price and the recent support level. The stop loss should be set at $552.61, the identified support price, to minimize potential losses. Target price could be set at $600, aligning with the resistance level and the forecasted price range. This strategy allows for potential profit from a moderate upward price movement while managing risk by setting a clear stop-loss level. Holding the position for a period of $2-3 weeks would allow for sufficient time to capitalize on the potential upward trend, while mitigating the risk associated with short-term market volatility. Based on the historical price and forecast data for Conflux, a cautious yet opportunistic investment strategy emerges. The recent price fluctuations suggest a period of consolidation, with the price hovering around the support level of $0.1379. The forecast indicates a slight upward movement, with prices potentially reaching $0.158 in the coming weeks. Considering this relatively stable and potentially bullish outlook, a long position seems appropriate. An ideal entry point would be around $0.145, aligning with the predicted price movement and providing a cushion above the support level. To manage risk, a stop-loss order should be placed at $0.138, safeguarding against unexpected downward pressure. The target price could be set at $0.158, capitalizing on the forecasted peak while allowing for potential profit, taking before encountering resistance. This strategy balances risk and reward, aiming to capitalize on the modest upward potential of Conflux in the short to medium term. Based on the provided price history and forecast for Worldcoin, a cautious short-term investment strategy is recommended. The historical price data reveals a downward trend over the past 2 weeks, with the recent price hovering around $1.92. The forecast suggests this downward trend might continue, with prices potentially dropping to $1.91 in the coming week. This indicates a bearish outlook for the short term. Considering the support price at $1.811, a potential entry point for a short position could be around $1.95, allowing for a small margin of safety above the current price. A stop-loss order should be placed at $1.98 to limit potential losses if the price unexpectedly rises. Target price for this short position could be set at $1.83, aiming to capitalize on the anticipated price decline while staying above the support level. This strategy focuses on capitalizing on the short-term, bearish momentum of Worldcoin, with a clear entry, stop loss, and target price to manage risk and maximize potential returns. Given the price trends and forecast for Avalanche, a medium-term investment strategy appears to be the most suitable. The historical prices show a general upward trend, with recent fluctuations around the $25–28 range. Forecast indicates continued upward movement, suggesting potential for growth in the coming weeks. The support price at $27.28 provides a safety net, while the resistance at $30.52 represents a potential ceiling for the near term. Therefore, an investment strategy involving a long position in Avalanche is recommended. A suitable entry price would be around $20 $7.50, slightly above the support price, allowing for some room for price consolidation before entering a potential upward move. The stop loss should be set at $26.50 to protect against any unexpected downward movement. The target price could be set at $30.00, aiming to capitalize on the forecast's upward trajectory, while leaving some room for potential price corrections. This approach balances risk and reward, allowing for potential profit while mitigating potential losses. Given the price trends and forecast for Jupiter, a medium-term investment strategy appears promising. The historical price data reveals a fluctuating trend with periods of both upward and downward movement. However, the forecast indicates a consistent upward trajectory over the next week, suggesting a potential for growth. The current price is hovering near the support price, indicating a possible buying opportunity. Therefore, an investment strategy focusing on a long position in Jupiter for a medium-term perspective is recommended. The entry price should be around $0.9793. The support price, allowing for potential upside as the price moves towards the forecast targets. The stop loss can be set at $0.932, a recent low point, to minimize potential losses. The target price could be around $1.1587. The resistance price, aiming to capitalize on the anticipated upward momentum. This strategy allows for a balance between risk and reward, aiming to profit from the potential price increase while mitigating potential downside. EOS, as recent price history shows some volatility, but overall, it seems to be in a sideways trend. While the forecast suggests a slight decline in the coming week, it's important to note that the price is hovering near its support level. This indicates potential for a bounce back. Considering the short-term forecast and the proximity to support, a long position could be considered, aiming to capitalize on a potential upward reversal. An entry price around $0.438, slightly below the current price, allows for a margin of safety while still benefiting from a potential upward move. A stop-loss order at $0.428 would help mitigate risk by exiting the position if the price drops below this level. The target price could be set at $0.468, aligning with the recent resistance level and the upper end of the forecast range. This strategy focuses on a short to medium-term investment perspective, aiming to capitalize on a potential bounce back in price within the next week or two. Based on the provided TRON price information, a short-term investment strategy appears most suitable. The historical price data suggests a recent consolidation phase, hovering around the $0.16 level, while the forecast indicates a slight downward trend. Price is expected to remain within a relatively narrow range. This scenario presents an opportunity to capitalize on short-term price fluctuations. Therefore, a short position is recommended. An entry price of $0.165 aligns with the current price and the resistance level. A stop loss at $0.167 would limit potential losses if the price unexpectedly moves upwards. The target price should be set at $0.16, aiming to capture a small profit from the anticipated downward movement. This strategy allows for a quick entry and exit, taking advantage of potential short-term volatility in TRON. Given the provided price data and forecast for C, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a fluctuating trend with recent dips, but also periods of upward movement. The forecast suggests a continued upward trajectory, with prices potentially reaching $0.438 within the next week. This indicates a bullish outlook for C in the medium term. Therefore, a long position is recommended for this strategy. An entry price of $0.385, slightly below the current price, allows for a margin of safety while still benefiting from the anticipated price increase. The stop loss should be set at $0.367, the recent low point in the historical data, to minimize potential losses. The target price can be set at $0.430, aligning with the forecast and providing a reasonable profit margin. This strategy allows for capitalizing on the potential for price appreciation while managing risk through a defined stop loss. Given the price trends and forecast for Shiba Inu, a cautious investment strategy would focus on a medium short-term approach to capitalize on the potential for moderate growth. While the historical prices show some volatility, the forecast suggests a gradual upward movement, with prices potentially reaching the resistance level in the coming weeks. The support price provides a cushion against significant downside risk, indicating that Shiba Inu is likely to find buying pressure around this level. Therefore, a long position is advisable for a medium-term investment strategy. An ideal entry price would be around $0.00000185, slightly below the current price and above the support level. The stop loss should be placed at $0.00000182, close to the support price, to limit potential losses. The target price could be set at $0.00000192, aiming to capture a portion of the potential upside movement towards the resistance level. This strategy balances risk and reward, allowing for potential gains while minimizing the downside exposure. Dogecoin's recent price history shows a volatile trend with both upward and downward movements. The forecast suggests a continued upward trajectory, reaching $0.227 within the next week. Considering the support price at $0.17593 and the resistance price at $0.22001, a long-term investment strategy appears promising. Therefore, I recommend a long position on Dogecoin. The entry price should be around $0.194, aligning with the current price and the forecast's initial upward movement. The stop loss should be set at $0.176, slightly below the recent support level, to mitigate potential downside risk. The target price can be set at $0.220, aiming to capitalize on the predicted resistance level. This strategy leverages the forecast's positive outlook while incorporating risk management measures. Given the price trends and forecast for Hooked Protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the current price close to its support level of $0.3632. The forecast suggests Hooked Protocol could potentially drop further in the coming week. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.38 would allow you to enter the trade near the current market price. The stop loss should be set at $0.39 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.35, aiming to capture a portion of the anticipated downward movement. This strategy prioritizes risk management and aims to profit from a short-term price decline in Hooked Protocol. Based on the provided price history and forecast for Aevo, a cautious short-term investment strategy appears most suitable. The recent price history shows some volatility, but the forecast indicates a slight downward trend over the next week, while the support price at $0.319 provides a potential floor. The resistance at $0.3458 suggests limited upside potential. Therefore, a short position could be considered with an entry price around $0.325, aligning with the current price and the forecasted downward movement. A stop loss should be placed at $0.336 to limit potential losses if the price unexpectedly surges. The target price could be set at $0.31, aiming to capture a portion of the anticipated decline. This strategy prioritizes risk management by setting a stop loss and focuses on a short-term opportunity based on the current price trends and forecast. Based on the provided price history and forecast for Coin, a cautious investment strategy is recommended, leaning towards a short-term perspective. The historical price data reveals a fluctuating trend with a slight downward bias over the past 2 weeks. While the forecast suggests a potential for slight recovery in the coming week, the overall trend remains bearish. Considering this outlook, a short position on Coin is advisable. A suitable entry price would be around $0.0062, aligning with the current price and the predicted price lows. A stop loss order should be placed at $0.00634, the recent resistance level, to limit potential losses. The target price for this short position could be set at $0.00593, the recent support level, aiming to capture a modest profit within a short time frame. This strategy aims to capitalize on the anticipated price decline, while mitigating risk through a well-defined stop loss order. Based on the provided Sun Coin price information, a short-term investment strategy appears to be the most suitable. The historical price data reveals a volatile trend, fluctuating around the $0.018 mark. The forecast suggests a slight upward movement, but it remains within a relatively narrow range. Considering the support price at $0.0180 and the resistance price at $0.01903, the short-term strategy allows for capitalizing on potential price swings within this range. Therefore, I recommend entering a long position at the current price close to $0.0181. The stop loss should be set at $0.0178 to limit potential losses. The target price could be set at $0.0189, aiming to capture the potential upside movement towards the resistance level. This strategy allows for a relatively quick turnaround, taking advantage of the short-term price fluctuations while managing risk effectively. Based on the provided price information for PEEP, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a volatile pattern with recent fluctuations. While the forecast indicates a potential upward trend, the current price is relatively close to its support level. This suggests a high probability of a temporary price surge before a potential correction. Therefore, I recommend adopting a long position with an entry price around $0.00000992, aligning with the recent high. The stop loss should be set at $0.00000965 to limit potential losses in case of a sudden price drop. The target price can be set at $0.00001100, aiming to capture the anticipated upward movement before a potential pullback. This strategy allows for a potentially profitable short-term trade while managing risk effectively. Based on the provided data for TON Coin, cautious investment strategy leaning towards the short term would be prudent. The historical price data reveals a fluctuating trend with no clear upward or downward momentum. The forecast prices suggest a slight decline over the next week, aligning with the recent price action. Given these factors, a short position appears to be the more suitable approach. An entry price around $4.85, slightly below the current price, would allow you to capitalize on the potential downward movement. The stop loss should be set at $4.93, above the recent high, to minimize potential losses. The target price could be set at $4.7, taking into account the forecast and aiming for a reasonable profit margin. This strategy prioritizes risk management while seeking to capitalize on the potential for a short-term price decline in TON Coin. Given the price trends and forecast for Bitcoin Cash, a bullish investment strategy would focus on a medium-term approach. The historical prices show a slight upward trend, with the current price hovering near the support level of $368.9. The forecast suggests Bitcoin Cash could rise from its current level to approximately $402 in the coming weeks. This indicates a positive outlook for Bitcoin Cash in the medium term. Therefore, I recommend a long position on Bitcoin Cash. An entry price of $369 would allow you to buy in at a price near the support level and potentially benefit from the upward movement predicted by the forecast. The stop loss should be set at $368.9 to minimize potential losses if the price falls below support. The target price should be set at $395, aiming to capture a significant portion of the projected price increase, while leaving room for further upside potential. Given the historical price data and the provided forecast for Chainlink, an investment strategy focusing on a short-term approach appears promising. The historical prices demonstrate a fluctuating trend, but the forecast suggests a consistent upward movement, reaching a potential high of $14. This indicates a bullish outlook in the short term. To capitalize on this potential, a long position is recommended. An optimal entry price for this strategy would be around $12.50, allowing you to enter the market before the predicted price surge. A stop-loss order should be placed at $12.00 to protect against any unexpected downward movements. The target price should be set at $13.80, aiming to capture a significant portion of the anticipated price increase while leaving room for potential market fluctuations. This strategy aims to leverage the short-term bullish momentum of Chainlink, offering a potential for attractive returns within a relatively short time frame. Polkadot's historical price data shows a recent upward trend, but the 2-week price change has been volatile. The forecast suggests a continued upward movement, with prices potentially reaching $4.43 in the coming week. The support price of $4.194 provides a safety net, while the resistance at $4.462 indicates the potential ceiling for this upward movement. Considering these factors, a long-term investment strategy focusing on Polkadot appears promising. An entry price around $4.194, slightly above the support level, allows for a margin of safety while capitalizing on the anticipated price increase. The stop loss should be set at $4.12, just below the recent price lows, to protect against unexpected downturns. The target price can be set at $4.462, aiming to capture the full potential of the resistance level. This strategy allows for a balanced approach, balancing risk and reward potential, while aligning with the positive outlook for Polkadot in the short to medium term. Based on the provided data for Near Protocol, a cautious investment strategy with a medium-term perspective appears most suitable. Price history shows recent volatility, with a slight downward trend over the past 2 weeks. While the forecast suggests a slight upward movement in the coming week, it remains within a relatively narrow range. The support price at $4.12 indicates a potential floor for the price, while the resistance at $4.609 suggests an upper limit for the foreseeable future. Given this outlook, a long position could be considered, aiming to capitalize on the predicted price increase. An entry price around $4.15, slightly above the support level, would provide a margin of safety. A stop-loss order set at $4.08 would limit potential losses if the price drops unexpectedly. The target price could be set at $4.45, aiming to capture a portion of the projected upward movement. This strategy balances the potential for profit with a reasonable level of risk, allowing for a medium-term investment horizon to play out the predicted price trends. Based on the provided price information for stacks, a cautious investment strategy with a short-term perspective appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, culminating in a recent dip below $1.60. Although the forecast suggests a slight recovery in the coming week, it remains below the recent highs, indicating potential for further consolidation or even a continued decline. Therefore, a short position is recommended, aiming to capitalize on the anticipated price weakness. An entry price around $1.65 aligns with the current price and the upper end of the forecast. A stop loss should be placed at $1.68 to limit potential losses if the price unexpectedly surges. The target price could be set at $1.57, the support level, allowing for a reasonable profit margin while minimizing risk. This short-term strategy allows for potential gains from the anticipated price decline, while managing risk through a well-defined stop loss. Given the Aptos price trends and forecast, a medium-term investment strategy focusing on a long position appears promising. The historical price data shows a fluctuating pattern with an overall upward bias. The forecast indicates continued growth, with prices projected to rise steadily over the next week. The support price at $8.64 provides a safety net, while the resistance at $9.84 suggests potential for further price appreciation. Therefore, an optimal entry price for a long position would be around $9.20, allowing you to buy in at a slightly discounted price before the anticipated price increase. The stop loss should be set at $8.70 to limit potential losses if the price drops below the support level. The target price could be set at $9.0, aiming to capture a significant portion of the projected price appreciation. This strategy capitalizes on the positive price momentum while managing risk through a well-defined stop loss. Given the price trends and forecast for Litecoin, a moderately aggressive investment strategy would focus on a short to medium-term approach to capitalize on the anticipated upward momentum. The historical prices show a slight upward trend, with the current price hovering near the support level of $71.21. The forecast suggests Litecoin could rise from its current price to around $76 within the next week, while the resistance sits at $74.96. This indicates a bullish outlook in the short to medium term, making a long position the most suitable strategy to capitalize on the potential for a price increase. For this strategy, an entry price of $71.50 would be ideal, allowing you to buy in close to the support level and benefit from any upward movement. The stop loss should be set at $70.80 to protect against any unexpected price decline. The target price should be set at $74.50, aiming to capture a significant portion of the anticipated price, while leaving room for potential further upside. This approach balances risk and reward, allowing you to participate in the potential rally while mitigating potential losses. Based on the provided data for Uniswap, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with both upward and downward movements, while the forecast suggests a continued upward trajectory, reaching prices above $9.00. The recent price action shows some consolidation near the support level of $8.146. This suggests the potential for a pullback before a sustained upward move. Therefore, a long position is recommended with an entry price around $8.30, allowing for a slight dip before entering the trade. The stop loss should be set at $8.00 to minimize potential losses in case of a more significant price drop. The target price should be set at $9.50, aiming to capture a substantial portion of the forecasted upward movement. This strategy balances risk and reward, capitalizing on the bullish outlook while acknowledging the potential for short-term volatility. Given the price trends and forecast for Bittensor, a short-term investment strategy appears suitable. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating further declines. The current price is near the resistance level, suggesting a potential for a pullback. Therefore, a short position is advisable to capitalize on the anticipated price decrease. An aggressive short-term investment strategy could involve an entry price of $498, aligning with the current price. The stop loss should be set at $508 to protect against any unexpected price recovery. The target price should be set at $479, slightly above the forecasted lowest price, allowing for potential profit before the market reaches significant support levels. Given the price trends and forecast for Internet Computer, a short-term investment strategy focused on a long position seems promising. The historical prices show an upward trend, with the current price hovering near the support level of $8.171. The forecast suggests a potential rise to $8.7, indicating continued upward momentum. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price, around $7.85. A stop-loss order should be placed at $7.53, slightly below the recent lows, to limit potential losses. The target price should be set at $8.6, aiming to capitalize on the forecast's projected peak. This strategy capitalizes on the anticipated upward movement, while managing risk through a well-defined stop-loss order. Artificial Superintelligence Alliance's 2-week price history shows a volatile pattern with both upward and downward movements. However, the recent price trend suggests a potential bullish outlook. The forecast indicates a steady upward movement over the next week, with prices potentially reaching $1.45. This positive outlook, coupled with a support price at $1.358, suggests that Artificial Superintelligence Alliance could be a suitable investment opportunity for a medium-term strategy. Therefore, I recommend a long position on Artificial Superintelligence Alliance. An entry price of $1.38 would allow you to buy in at a slightly discounted rate before the predicted price surge. The stop loss should be set at $1.32 to minimize potential losses if the price unexpectedly drops. The target price should be set at $1.45, aligning with the highest forecast price, allowing you to capitalize on the anticipated price increase. This strategy aims to benefit from the projected upward momentum of Artificial Superintelligence Alliance over the medium term. First, based on the provided price history and forecast for Optimism, the strategy suggests a short-term long position. The recent price history shows a fluctuating pattern, but the forecast indicates a potential upward trend in the coming week. The price is currently hovering near the support level, suggesting a possible bounce back. Taking a long position allows us to capitalize on this potential upward movement. The entry price for this strategy should be set at $1.56, aligning with the current price and the support level. The stop loss should be placed at $1.54, slightly below the support level to minimize potential losses. The target price can be set at $1.67, aligning with the highest forecasted price, allowing for a reasonable profit margin. This strategy aims to capitalize on the short-term bullish momentum predicted by the forecast while managing risk through a well-defined stop loss. Based on the provided Ethereum Classic price information, a short-term investment strategy appears to be the most suitable. The 2-week price history shows a general upward trend, but the forecast suggests a slight plateauing in the coming week. This indicates a potential for short-term profit-taking opportunities. The entry price for this strategy would be $19.50, allowing you to buy in near the current price while leaving room for a slight dip before the predicted price increase. To manage risk, a stop-loss order should be placed at $19.00, safeguarding against any unexpected downward movements. The target price would be set at $20.20, aiming to capitalize on the forecast price increase. This strategy takes advantage of the short-term upward momentum while mitigating potential losses through a well-defined stop loss. Given the price trends and forecast for Ethereum name service, an investment strategy focusing on a short-term approach appears suitable. The historical prices demonstrate a consistent upward trajectory, with the current price near its forecast and close to the support level of $17.98. The resistance is at $18.94, suggesting potential for further upward movement. Therefore, a long position is recommended to capitalize on the anticipated price increase towards the resistance level. An entry price of $17.98, aligning with the support level, minimizes risk. The stop loss should be set at $17.50 to protect against unexpected price declines. The target price should be $18.94, aiming to capture the full potential of the upward movement before reaching the resistance level. The provided price data for Solana name service suggests a bearish short-term outlook, while the historical prices show some fluctuation. The 2-week price change indicates a downward trend. This trend aligns with the 1-week price forecast, which projects further declines. The support price at $0.2152 and the resistance price at $0.2318 further reinforce this bearish sentiment. Considering these factors, a short-term short position on Solana name service appears to be the most suitable strategy. An aggressive short-term investment strategy could involve entering a short position at the current price, around $0.233. The stop loss should be set slightly above the current price, at $0.237, to protect against any unexpected upward price movement. The target price could be set at $0.215, aiming to capitalize on the potential price decline towards the support level. This strategy allows for potential profit from the anticipated downward movement, while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Aave, a medium-term investment strategy appears most suitable. The historical prices show a general upward trend, with recent price fluctuations around the support level of $170.95. Forecast indicates continued upward momentum, suggesting Aave could reach prices above the current resistance level of $183.92. Therefore, an investment strategy focusing on a long position is recommended. A conservative entry price of $175 would allow you to buy in while staying above the support level and benefit from the anticipated price increase. A stop loss at $170 would protect your investment from significant downside risk. Target price could be set at $190, aiming to capture a substantial portion of the potential price appreciation before reaching the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating the impact of potential market fluctuations. Given the price trends and forecast for injective, a medium-term investment strategy appears most suitable. The historical prices show a consistent upward trajectory, with recent fluctuations indicating a potential consolidation phase. The forecast suggests continued upward momentum, with prices potentially reaching $24. The support price at $21.69 provides a safety net, while the resistance at $23.6 signifies a potential ceiling for the immediate future. Therefore, an investment strategy involving a long position is recommended. A conservative entry price of $22 would allow for some price appreciation before entering the position, while a stop loss at $21.50 would protect against significant downside risk. The target price should be set at $24, aiming to capitalize on the projected upward movement and offering a reasonable profit margin. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses in the medium term. Polygon's recent history shows a volatile period with both upward and downward movements. The current price is hovering near the lower end of the recent range, suggesting a potential for a rebound. Forecast price indicates a consistent upward trend over the next week, reaching a high of $0.393. This positive outlook, coupled with the potential for a bounce from the current price level, makes a long position in Polygon a compelling investment strategy. To execute this strategy, an entry price of $0.318 could be considered, allowing you to buy in at a relatively low point. The stop loss should be set slightly below the recent lows at $0.301 to minimize potential losses. The target price could be set at $0.393, aligning with the highest forecast price, allowing you to capture the full potential upside. This strategy targets a medium-term investment horizon, allowing time for the price to move towards the target while mitigating risk through a well-defined stop loss.